Why I think TENAGA is a good counter for accumulation now. With AI or artificial intelligence poised to be the next booming era, look at how it is already reshaping industries and societies in profound ways. Which industry do you think would stand to benefit from AI boom the most? While AI boom is expected to transform virtually every industry, in my personal opinion, energy and utilities company is one of the industry poised to gain the most from the AI revolutions, and here is why. How AI contributes to higher energy consumption. AI is going to contribute to higher energy consumption in various ways. First, data centers and cloud computing. We all know that AI relies heavily on data centers for training, deploying, and running machine learning models. These facilities require significant power for computation and cooling. Advanced AI models like large language models demand enormous computational resources. On top of that, edge devices and Internet of Things, or in short IoT. The proliferation of AI-driven Internet of Things devices such as smart meters, cameras, and appliances will only increase the total energy demand. While each device may consume minimal energy individually, but their cumulative impact can be substantial. Third, EV infrastructure growth. Do you know that AI is a key enabler for electric vehicles, managing charging networks, and optimizing battery use? However, widespread EV adoption will only increase electricity consumption going forward. Fourth, AI in manufacturing and automation. As more industries start to adopt AI to automate processes, industrial energy use is likely to grow due to increased operation speeds and reduced downtime. So what it means for energy providers like TMB or TENAGA? I see an increase in energy demand going forward. Utilities companies like TMB may see a surge in demand driven by AI's energy need, especially in powering data centers and supporting Internet of Things and EV networks. Second, revenue opportunities. Higher energy consumption will translate into increased revenue for utilities companies like TMB. Third, infrastructure investment. This would also mean that utilities companies like TMB would have to expand its capex spending to modernize grids to handle additional loads while integrating AI for operational efficiencies. On top of that, if you are not aware, the Naga National Berhad or TMB has also begun implementing smart meters in Malaysia as part of its effort to modernize the electricity grid and improve energy management since 2014. Here is a timeline of key milestones in the rollout achieved by TENAGA Task Force. Its early phases starts from 2014 to 2016. In 2014, TMB announced its plans to adopt smart meters as part of the broader Advanced Metering Infrastructure, or in short AMI, under its grids modernization strategy. And in 2015, pilot projects were initiated in selected areas to test the feasibilities and performance of smart meters. In 2016, the first large-scale pilot deployment began in Malacca, where approximately 1,000 smart meters were installed for testing purposes. And the full rollout begins from 2017 till 2023. In 2017, the nationwide rollout officially commenced, with Malacca as the initial focus area. This phase aimed to install 300,000 smart meters in homes and businesses. In 2018, TMB expanded installations to parts of the Klang Valley, starting in Selangor, Kuala Lumpur, and Putrajaya. And from 2019 till last year, 2023, TMB scaled up its efforts to achieve its target of installing 9.1 million smart meters across Peninsular Malaysia by 2026. The Klang Valley became a major focus during this period. And as of 31st March 2024 this year, a total of 273,316,000 meters has been installed for a cumulative total of 3.822 million smart meters nationwide against the 4.4 million meters targeted for RP3. In fact, even for my house located in the Penang state, most of the housing estate here has been replaced with smart meter in recent months. This initiative is part of TMB's commitment to building a smart grid which supports Malaysia's transitions to a low-carbon economy and aligns with the country's renewable energy goal. But do you know that the adoption of smart meters by TENAGA Nasional or TNB offers numerous opportunities to enhance revenue streams and operational efficiency in the medium to long term? Here, let me name a few ways of how adoption of smart meters can benefit TNB's revenue going forward. First, improve billing accuracy and reduce revenue loss. This can be achieved through eliminations of manual errors. Smart meters provide real-time and accurate energy usage data, thus reducing billing dispute caused by estimation errors or manual meter readings. In fact, in the past, TNB has reported significant losses due to electricity theft, particularly from illegal tampering of meters. According to various reports in recent years, TNB has been losing hundreds of millions of Malaysian ringgit annually due to meter theft alone and other forms of electricity theft. With the implementation of smart meters, it can help to detect electricity theft and tampering more effectively, thus curbing non-technical losses that would otherwise affect its revenue. Second, the smart meter can enhance tariff models and dynamic pricing could be achieved through time of use pricing. TNB can implement dynamic pricing strategies, charging higher rates during peak hours and lower rates during off-peak hours. This would incentivize customers to shift their energy usage, optimizing grid efficiencies and increasing revenue during peak times. Customized plans. Smart meters would allow for personalized energy plans, encouraging customers to choose premium services or tailored pricing structures. TNB can also get to optimize its operational costs through automated meter reading. By eliminating the need for manual meter readings, TNB reduces labor costs and operational inefficiencies. Smart meters can alert TNB to potential infrastructure issues before they escalate, thus reducing downtime and costly emergency repairs. Energy demand management and load forecasting. Real-time data from smart meters would allow TNB to forecast energy demand more accurately. This would enable better energy procurement and generation planning, thus avoiding overproduction or underproduction costs. By balancing loads more effectively, TNB can get to optimize infrastructure investment and reduce stress on the grid, enabling new revenue streams. The granular data collected by smart meters can be anonymized and sold to third parties, for example, for market research or energy analytics, thus creating an additional revenue stream. What about value-added services? TNB can also introduce services such as home energy management tools, consumption insights, and energy savings recommendation, potentially which can be offered through subscription model. Supporting renewable energy integration. Smart meters also facilitate net metering for customers with solar panels or other renewable energy sources, thus enabling TNB to charge for grid access and other related services. By supporting distributed energy resources like solar or battery storage, TNB can charge fees for grid balancing and energy storage service. What about strengthening customers' relationship? Real-time energy usage insights empowers customers to manage their consumption better, leading to higher satisfaction and potentially reducing churn among customers. And this in turn would also help in debt recovery. Prepaid billing options enabled by smart meters ensure that TNB receives payments even before energy is consumed, thus would get to improve its cash flow. Last but not least, the adoption of smart meter would also facilitate smart city projects. By integrating smart meters into broader smart city initiative, TNB can play a central role in urban infrastructure such as EV charging stations and energy efficient systems, tapping into new markets and collaborations. With so many good benefits on the card for TENAGA or TNB, it is any wonder why TNB is doubling down on its efforts to speed up the installation of smart meter throughout the whole Malaysia. So in summary, smart meter adoption would help to position TNB for long-term growth by improving operational efficiencies, unlocking new revenue opportunities, and enhancing customers' engagement. While the initial rollout may require significant investment, the benefits in cost savings, revenue generations, and future readiness would make it a strategic and profitable move. On the other hand, while the AI boom will increase energy consumptions and have direct benefits on energy provider like TENAGA National Berhad, its ability to drive efficiencies and enable the integrations of renewables can mitigate the environmental and operational impact. The key is to balance demand growth with sustainable energy practices, thus ensuring that the benefits of AI outweigh the costs. TNB, being one of the largest companies in Malaysia by market capitalization, consistently ranking among the top stocks on Bursa Malaysia. It also has a strong track record of financial performance with steady revenues and profitability supported by its monopoly over electricity transmission and disruption in Peninsular Malaysia. In fact, its most recent quarterly earnings release on the 29th November, TNB reported a net profit surge of 85% to RM 1.58 billion in the third quarter ended 30th September 2024 from RM 856.2 million last year, thanks to hefty foreign exchange gain too. It booked a forex gain of RM 1.12 billion compared to a net forex gain of barely RM 4.6 million in third quarter financial year 2023. Its quarterly revenue also grew by 6.6% to RM 14.35 billion against RM 13.47 billion, driven by a rise in electricity sales. Going by my thesis above, I foresee the TENAGA revenue is only going to record an increase going forward from now onwards. On top of that, TNB has been paying dividends regularly to its shareholder too, which is a hallmark of blue chip stocks. So to me, buying TENAGA stock on a dip is one of the safest bets, even if tomorrow the overall market were to crash and cause TENAGA stock price to plunge. I am comfortable holding on to it, riding through the roller coaster period. As a utility company, TNB benefits from stable demand for electricity, making it less susceptible to economic downturns compared to companies in cyclical industries. Moreover, in my personal opinions, TNB's investment in renewable energy, smart grids and regional expansion would only add growth prospect to its established core business. On a side note, if today you choose to plunge yourself into the world of stock market, you first need to embrace the volatility nature of the stock prices, especially in the short term. If you are someone after buying into a stock, expect that the stock price must rise the next day or the very next week or even the next month, and if not, you would be cursing everyone except yourself, then I think the stock market may not be suitable for you. It would be better for you to tuck your money safely somewhere, maybe into fixed deposit with the banks. Because the fact is, even the best stock in the world like Apple was down 31% in January 2023, Nvidia was down 62% in November 2022, Amazon down 56% in December 2022, Netflix and many more great stocks have undergone seasonal downturns, if you get what I mean by now. But today, look at all these great stocks. The prices have since rebounded and trading way higher. This makes me recall a phrase from Benjamin Graham, who was the prominent father of value investing. He used to say that in the short term, the stock market is a voting machine where the stock prices tend to move irrationally based on market sentiments and speculative activities rather than the underlying fundamentals of the company. But over the long term, the stock market is a weighing machine and the stock prices will reflect the true value of a company based on its fundamentals such as solid earning growth, strong balance sheet to reflect its growing intrinsic value. Last time, when I first started out investing into the stock market, I used to get frustrated too by the volatility of the stock prices. I used to play the blaming games as well. Over time, I have grown after being in the stock market full-time for close to 5 years by now. I've learned to embrace the stock market volatility nature and are ever ready to buy the dip on stocks which are trading below its fair value or some call it intrinsic value. But as always, before you decide to put your money into any investment, please remember to do your own due diligence and never buy into a stock just by listening to any random YouTuber dishing out their opinions on a particular stock and that includes me. Full disclosure, I did buy into TENAGA stock on 29 November when the market sold down this stock despite reporting a quarterly profit surge. To me, TENAGA is a stock worth accumulating, especially when the market is behaving irrationally by selling it down. The intrinsic value based on alpha spread on TENAGA stock stands at Rm 18 ringgit and 59 cents on the base case or normal case scenario. At current price, TENAGA is trading that is around 13 ringgit 50 cents. As I'm recording this video, it is trading at a discount to me. This is the end of my sharing for this episode. If you like the content of this video, you should know what to do, right? Bye, and I shall see you again in my next video. Ciao!